When you look at all the tax-advantaged savings accounts offered by many health insurance plans, it starts to look like alphabet soup. There are HSAs, HRAs, FSAs, and MSAs. Each of these three-letter combinations represents a different type of medical savings account. But the healthcare reform law will change how those accounts can be used. Let's take a closer look at those changes. Beginning January 1st, 2011, over-the-counter drugs not prescribed by a doctor will no longer be reimbursable through a health reimbursement arrangement, known as an HRA, or through a flexible spending account, referred to as an FSA. Only prescribed medications and insulin will be eligible for reimbursement through these accounts. That means Jennifer will no longer be able to use her HRA or FSA to pay for items like cough syrup or pain relievers that she buys off the shelf at a drugstore. Only those drugs prescribed to Jennifer by a doctor will be reimbursable. There are also changes for over-the-counter drugs purchased through a health savings account, known as an HSA, or an Archer medical savings account, called an MSA. Both types of savings accounts can be used to pay for over-the-counter medications, but the charges will now be taxable. Also, beginning January 1st, 2011, the tax on unqualified expenses paid for with an HSA and an MSA will increase to 20%. This is twice as much as the current tax for HSAs and 5% higher than the current tax for MSAs. This means every time Jennifer uses one of these accounts to pay for a service or item that is not considered a qualified medical expense, she will have to pay 20% of the cost in taxes. For example, if Jennifer spends $50 on a non-qualified medical expense, that $50 will result in a $10 tax. To find out which healthcare expenses can be reimbursed through these accounts, contact your plan administrator. Again, the changes we've mentioned so far begin in 2011, but the biggest change for tax-advantaged savings accounts will take effect January 1st, 2013. On that date, contributions to flexible spending accounts, or FSAs, will be capped at $2,500 per year. That means Jennifer will not be able to put more than $2,500 each year into her FSA. Before the healthcare reform law, there was no maximum contribution cap for medical FSAs, although many employers did limit contributions to $4,000 to $5,000 per year. For more information on this and other impacts of the healthcare reform law, visit the U.S. Department of Health and Human Services website at the address on your screen.